So traders, now that we've looked at some diagrams, we're actually going to now look at some live examples on the chart. Now already on this chart, we can see that there is 3 equal highs by here. So we know that there is liquidity built up above it. Now the swing order flow is bearish, so price may simply sweep into this, eating up the liquidity before pushing lower. We know this because banks are simply looking to get a large position before the market moves, or they're simply looking to fulfill orders to move money from A to B. Or the alternative is price will use all this liquidity that's built up to completely reverse order flow. But for now, we're just going to observe price and see how the market reacts to the liquidity. We can actually see liquidity being built up on this side as well. We're actually going to draw this, although you don't actually have to draw it when you are trading live. We can see that liquidity has been swept there before rejecting price. And then it has looked to sweep the liquidity that's been built up by here. And we've had a strong rejection on this price point. So we can actually now look to draw diagonal liquidity by here. We can see that that's been swept. And by here, you can actually see dynamic liquidity that's been built up. But this doesn't have to sweep straight away, guys. This could be building up for a later point. You can even see these points by here will actually be building up liquidity on a higher time frame perspective. So we're actually going to draw that as well. Let's see liquidity being built up by here. Liquidity being built up by here. Again, you don't have to draw all this, guys. I'm just doing this just to show you how the market reacts to it. So this liquidity has now been built. You can see that price has actually touched this trend line by here, further building liquidity up above it. We're actually going to delete that now, and we're going to make it time now. Traders, we can see that all the liquidity that was built up on a longer term perspective has actually been swept, and you can actually see that price has actually swept not only to the top of the liquidity but into this supply zone. The same by here, all the liquidity was built up by here. It actually swept into a demand zone. Now you can actually use this to actually get involved in liquidity sweeps. And in fact, my methodology actually utilizes it for that very reason, because you'll always find that every sweep will normally be sweeping into an area where banks have their orders. And as long as that you've identified those zones as supply and demand zones, you can utilize these regions and you can benefit from the same moves as the banks.